Rosehart show. We're live again for another week, another state of the market, I suppose we'll call it. Lately, that's what we've been talking about is like what's going on in the market. We're in a bear market, and so the state of the market is bearish. However, I see a number of things that are positive. Um, I'm starting to enter into the real estate market again. I'm starting to dollar cost average in. We picked up a flip here in London for 277,000, a detached house that we're going to take on. I'm closing on a property in Port Franks near Grand Bend. It's got 2 cottages on 1 lot. I might be quickly flipping that one. It might be something that we long-term hold. Undecided. We have the summer rented out for like, I wanted to say like 2,500 a week. So there's good money to be made in the summer season. If anyone's looking for a cottage, by the way, hit me up, because that is something that I'd be interested in maybe assigning. But yeah, so the state of the market. The June data suggests that we are now down almost 20% in real estate from the frothy highs here in Ontario. That's a pretty big drop. Blessed that I sold the majority of my real estate portfolio. Not quite at the top. I sold it in the fall last year, but majority of my properties I sold. I only have 5 million in exposure left to real estate, I think. Well, if you include my house, a little bit more, but not selling my house right now either way, so it isn't really a factor. But yeah, it's been definitely something that been thinking about here. I'll get some of the questions here. Hey, Omega, how you doing? William says evening. Hey, how you doing? Michaela says, hey, Mike, how are you and your family doing? We're doing well. My daughter, who's 6, is a challenge and a half. She's just like I am, and she's having challenges like I did when I was growing up with, controlling my emotions when I'm very, very stubborn and I want my way. That assertiveness and sort of life personality hack does serve you well in business, but it's very difficult to be a parent to a child like that. So I've been challenged recently with being a parent. Having 3 kids is a challenge, and I'm not going to pretend that it isn't. So that's been the biggest thing that I've been focused my time on is trying being the best dad that I can be. But yeah, I still have a few projects going on. We're still, we have a couple of flips we're finishing up. We're taking on a few new projects. Of course, I watch the stocks every day. Did everyone see Voyager Digital? I had $8,300 worth of shares that I got assigned a while back, and I had a number of crypto plays. So I was in pretty much everything related to mining, everything from Coinbase to like Voyager, etc. Voyager went bankrupt. Chapter 11, they're declaring. So that's shitty for my small, tiny stock position in that company. But actually, I'm overall up today, and I've been up for the last couple of weeks. I've been beating the market because I've been shorting, or rather hedging my portfolio. Sorry about my neck here, guys. I was actually working on my yard. We have a sizable estate here, and I was cutting down some branches, and I was burning them in our fire pit, and I scratched myself in like 20 places, these giant branches. It was a great workout though, and I got some free cardio and strength training out of trying to snap all those branches and wrangle the yard up. So that's what I was doing the other day, and yeah, I've just been enjoying some of the finer things in life lately. Let's see. Omega says, are you still interested in a type of crypto mining space partnership? Let me know. Yeah, I mean, if anyone wants to partner up, I have some available machines right now that I would love to plug in. They're just literally sitting in storage. I don't have anywhere to put them. My wife refuses to let me run them in the basement since they are very, very loud. They're in the server cases, so they're quite loud. And you also need 220 power, so you need like 10 gauge wire, basically like dryer plugs you gotta plug in. So you need like 100 amps of available power. If anyone has that and wants to partner up and they're in the London area, hit me up. If you have like a garage, like a single car garage or like a basement, you'd want to be soundproof basement. Garage is better, or even a shed. If you have like a lockable shed with good in and out ventilation, that's all you need is a fan bringing air in and a fan bringing air out. You need to bring in and out a lot of air quickly. That's the secret. Hit me up because I'd be happy to let you buy in on the machines at a pretty good discount, and we can run them, and it's pretty passive. So good little way to dollar cost average in on the crypto space, especially ETH, and I think it's great value right now at the current prices. It'd make it worse for sure, but 5 years from now, we'll be thankful that we held or that we bought through these times. So just remember that, guys, that a lot of the big tech plays, a lot of the big giants right now are down, 25 to 50%. We're talking PayPal, Amazon, mm, Apple, Microsoft, everything, right? Like everything is down. The stock market is on sale. The Nasdaq's almost 30% off of its, or year to date rather, is off 30% right now, approximately. S&P 500, 20% approximately. Crypto, like 60, 70% down. So there's quite a bit of opportunity for those who are savvy and can recognize that. So I think this is now a good time to start dollar cost averaging in. Real estate also down, especially in Southwestern Ontario. Um, will it go lower? Potentially. But at a certain point, it will start pivoting upwards, right? And I think it's important that you can negotiate really good discounts now. It's important to start dollar cost averaging in now because we can't predict the bottom. But if we buy in now, we know that in 5 years it'll be much higher than it was. So it's potentially a great opportunity if you can start getting in now. Don't go, all in, but start buying in now, right? And then start dollar cost averaging. We're in the dip. We don't know where the bottom is. We could jump from here. We could go another 10, 20% lower. But suffice to say that if you bought now, 2, 3 years from now, you'll probably make 20, 30% pretty safely on your capital. So it's a good place to be if you have capital right now. Next question. Do you know that we can buy a house on work permit? If yes, then is that like we have 40% down tax or something like that? So I don't know a ton about buying with work permits other than I've talked to a few people who were able to buy and they're working towards their residency. In most cases, it was through like an uncle or a partner coming on title, I think, or holding title for them, or holding title in trust, I think is another way that you can kind of get that done. From a financing perspective, I think you have to be a citizen for you to get the best loan to value ratios. I know as a Canadian investing as a non-citizen of the US, I typically have to put 25 or 30% down. There are Canadian banks and just US lenders in general, that are fine to lend to Canadians. So there's definitely opportunity to buy as a non-resident, or rather non-citizen. You can definitely be a foreign investor and invest. So there's tons of opportunities, right? It's all about perspective, right? You got to say, hey, if you really want to get exposure to that market and you have to put 30% down, that might be okay, right? Especially in times like this where interest rates are high. They may come down in the next 2, 3 years, but right now we see them cranking interest rates upwards, right, to stave off inflation. And this is I've talked about this ad nauseum in the past several weeks. You guys know I did a deep dive on how I think things would play out. And, I think real estate won't be hit as hard as, say, tech or crypto, but we're going through a bear market for the first time in a really a long time where real estate and the stock market are going down together. Typically, they decouple and there's a bit of a lag between them. So I don't know. We will see how it plays out. To me, this recession feels like it could be a lot worse for real estate and business than the stock market. The reason I say that is, but then at the same time, we've got these immigration issues that I talked about that are strong headwinds for real estate. I don't know. There's so many factors conflating at once. So if in a box with nothing else going on, real estate should be tanking, right? We should see it just getting shit on because rates are climbing aggressively. We're talking about in July, another 0.75% increase, et cetera, so forth, right? Where things are getting beat up. Someone just said, remember the last time this happened in 2020? True. I bought 14 properties the last time this dip happened. In 2020, we had a dip comparable to where we are right now. The difference between 2020 and now is that in 2020, rates were almost zero. So we were paying like 3% interest to buy these properties. There was no confidence in the market. The world thought that the market might end. The difference between then and now is, although we've fallen the same amount in real estate and more in stocks and other areas, is that in real estate right now, you can't, even if you want to buy, it's very hard to qualify because we're in a credit recession. There's a tightening of credit. No one wants to lend because everyone's afraid of inflation going out of control. At the same time, they're afraid that rates are going to keep going up. So why would they lend their capital out now if rates are going to go up? When rates start going down, as soon as the government says, hey, we're going to start stimulating the economy because we've put the economy into a recession, which is what will happen as they continue to crank on rates, we will hit recession point. Then they will accept the fact that they're in a recession, and that's when they have to deal with the fact that they're in a recession. Jerome Powell at the Fed in the US still hasn't, the government hasn't addressed the fact that we're in a recession. We're technically in a recession right now. And as soon as they do, it will get much worse, I think, temporarily. And then at that point, that's when I want to go so hard into all stocks, crypto, real estate, especially real estate, because at that point that we acknowledge there's a recession, as soon as the government acknowledges, they have to then deal with it, right? If they keep pretending it isn't happening, they can continue to tighten, right? And continue to raise rates. Once we're in a recession, every single recession rates fall, right? That's their only real lever to help people, is to stimulate the economy, the stimulus checks, print money, and lower rates. That's how you stimulate businesses to grow. And so that will come. And when that comes, I think real estate will be hot again. And so I'd like to negotiate great deals now. And I'm also just in the business, right? So if a flip comes across my desk and I can turn it around, even in a declining market, I can still make money if my margins are, if I have enough margin on the deal. So I will keep doing deals. Even if the market continues to decline slightly further, I will still make lots of money in real estate. The margins are tighter now. Be much more careful the deals that you're taking down. Running all your numbers, making sure you're cash flow positive. Like, what's the worst case scenario? If I have to hold this property for, say, 2-3 years, will it be cash flow positive, right? Those are questions you have to ask yourself, right? So, yeah. The next question was... ZR Wooten says, just got let go from my finance job for bullshit reasons. I have decent suspicions is because I have different political views and those around me. What would your advice be going forward? Bummer. Sorry to hear that, by the way, but getting let go sucks. I think it's one of those things where sometimes one door closes and maybe another one opens and the other one was the better path. So yes, is there political, what's the word? Like political discrimination, I guess is kind of the word, in workplaces? 100% yeah. I used to share personal finance articles and the VP called me into the office and says, hey, stop sharing personal finance saving articles on your LinkedIn. It's offending other employees and potentially customers. I'm like, wait, saving some of your money and not spending it like an idiot? It was like Mr. Money Mustache articles, like the most bland, safe personal finance articles. And I had a blog where I shared similar views. And they're like, yeah, but like a lot of people at work are making $100,000 a year and they're paycheck to paycheck, or they're in debt up to their eyeballs. And they have personal reasons why they're in debt up to their eyeballs. And it's rude to call attention and it makes them worry about their debt. I'm like, they should be fucking worried about their debt. If you have personal consumer credit card debt and you make $100,000 a year, what are you doing? Like, get that new Apple Watch off your wrist, sell it. Like, trade the keys in for your car and get a Honda Civic. People make bad choices. And there's a reason that I didn't fit in the corporate world. It's because I don't like the current culture in the corporate world. I did, by the way, fit in for 3 years. And I learned to wear knee pads. And I learned to keep my mouth shut. And I was there first in the morning and I was there last. I made sure that the VP was gone, my boss's boss, everyone was gone before I left the office. Like, I tried to show face and basically kiss ass. That's literally what you do in the corporate world. But I got promoted from consulting analyst to senior analyst. Then I was a manager running a team, got promoted again. I got promoted every single year. I climbed the ladder quickly. Don't get me wrong. I did well in the corporate world, but I didn't get paid well for what I did relative. Like, in real estate, I think in my second year of retirement, so having quit my job and sort of messing around in real estate, doing what I love, like chasing deals and stuff, I think I made like 800% more than I made at my day job. So that's something to remember, guys, is that, this year I make 15 times what I made at my job. Like, I've now in a year make almost as much as my whole career would have been at that shitty consulting job. And no offense, like I have friends probably that are watching this that still work at that company in Toronto or London location. And, there's nothing wrong with the salary job. And, anyway, so my point here, I was trying to get to with your question there. I know it feels shitty that you got laid off or fired rather. Go find a company that you fit in with, where the political views align. Where I worked, it was very left socialist leaning. I tended to lean more free, and I don't know I don't know where I fall on the spectrum, because some of my ideals align with the left believes, some of them align with the right. It's hard to vote for everything all in one. I wish that we had a process where you could vote on each individual issue. Like you might be feel differently about gay rights than you do about the economy, but I have to vote because I care about the economy more than anything else. I care about money and I care about the free flowing of money. When money gears stop in a society, it's fucked, and we have war and we have death, right? Like we're fucking looting on the streets. So that's why I think the economy is number one. That's what people should be voting for. I have friends who like all they vote for is like liberal ideals of like gay rights or like abortion or like whatever. They have these certain things like that's their thing. Like I had a friend who only voted about like drug laws. That was all they cared about because like they were into drugs. And so I get that people vote like some people vote on stupid shit. It's sad in our society that the majority of people are idiots. Not that's too harsh maybe. The majority of people don't care about the inner mechanicals of how the world works. And they're just concerned about their silo and how they can interact within their silo of what they're interested in. And that sphere often doesn't include all of the other issues. So people don't want to worry about how things run, how society should run. They just, anyway, I don't know. Um, it's shitty. Democracy's shitty. I refer to democracy as tyranny of the majority. I don't know if that's a real political science term. Probably isn't. I've heard tyranny of the minority, um, but it's tyranny of the majority because the 51% can basically vote to kill you if you're a landlord or a property owner or whatever. Like literally, it's just the mob rules. And we know that using propaganda and a bit of money and a good marketing budget, you can make people think or do whatever you want. We can literally get soldiers to kill people, right? We've done these scientists with the shocking experiments, right? Like you can get the masses to do pretty much whatever you want. You can literally get people to kill each other um, if you take away them feeling that they're responsible for that. Like you're the authority telling them to do something. And then when it comes back to you that, as the governor or the politician that said to do that, there's no repercussions. It's like, oh, well, oh, darn. Like we hear about all these scandals of corruption and whatever else. And it comes back like 10 years later. And it's like, yeah, actually the governor didn't have good information. Like they made a bad decision on wrong information. No charges are laid. No one cares. Oh, they embezzled fucking $10 million and no one cares. Like, because time has passed and it's healed all wounds. It's messed up. It's a bad system. I don't say I have a better one, but like humans be fucked. that's what I gotta say about society in general. But what is good about that is you're probably watching this and you're probably not fucked. You probably have a head on your shoulders and you can think. And the thing is that this society is designed in a way that you can be a winner. I'm not saying it's perfect. I'm not saying it's right. But in our current system, you can beat it and be free of it. That's what the fire movement is. I'm like, this is the way that you take back all of your time. You're no longer a slave. And like, yeah, there are other things that matter, but I think going from wage cuck slave to like where you're working for money all the time and you're on a treadmill and you can never get off to like 5-10 years of finding a way out of that to doing whatever you want in life because you have passive income coming in from your portfolio that you basically save up a bit of money and then you invest that money and live off those returns. I think that's the secret to being free. And then if you want to go and live your own life on an island or build your own society, like I want to do at some point, I want to get resorts going in multiple countries and have our own community where, we have multiple passports. And if Canada goes to shit, like it's okay. We've got a Costa Rican passport. We've got a residency permit in Bahamas. We can go wherever, right? And so having those resorts in those multiple countries is still one of the things that I'm adamant on. More important than the locations is the group of people that you just surround yourself with, right? I want to be around great guys and girls that have your back, that you can build a community around. That people used to say like you're only as safe as your guns, right? Like your protection. But I think more important than guns or protection is having people around you, right? That you can rely on, that you can support and have that community. And there's just something really great about having a good community of like-minded individuals around you. You feel better. Life is better. So I don't know. That's what I'm working on building. The right community of people, the right, the right mindsets. So yeah, I don't have the answers, but I guess to sum it up, maybe getting laid off and not being around a bunch of people who have differing political opinions than you on the daily. I know it might hurt that you lost that finance job now in the short term, but in the long term, it might actually be better for your mental health. You might actually be better for your financial health as well in the long term. So Look at it as a positive and try to find the positive and spin into a positive as opposed to being focused on the negative. It's not going to get you anywhere. It's out of your locus of control. You can't get hired back. There's nothing you can do at this point. Don't wallow on it. Move on, right? Um, Everything happens for a reason, right? At least maybe it doesn't, but maybe you are in some control of your destiny, but at least it feels better to think, hey, some things are out of our control and wallowing on them doesn't necessarily make our lives any better, if not worse. So don't worry about it. Omega says maybe bootstrap it to let it grow into other areas like data storage and stuff. There are lots of things you could do for sure. I could take the machines apart, but yeah, I just need to find somewhere to plug them in. They've been staying for like a few weeks now, and it's been a bummer, but something I need to worry about, but that has not been a top priority for me. It's not screaming as the most important thing. Mass Financial Hero says, hey, Mike, do you regret investing in stocks and crypto and should have just stayed in real estate? No, I mean, do I regret like not being able to perfectly time the market? No, because it's impossible. It's not something within my control. Do I wish that when I sold properties and had a whole bunch of cash in January, that I didn't put that all into stocks and crypto? Sure. Like, I'd rather have cash right now, sure, than my Bitcoin that's worth half. Sure, yes, I'd prefer not to lose $1 million or two. But in the long term, it'll come back. I'm not worried. The market's going to come back too. Real estate is also down. And you got to remember, guys, that like my real estate portfolio was levered and not heavily levered, but like, let's look at an example. Just like I wasn't this heavily levered, but I'll give you an example. So say someone buys a house for $1 million and they put 20% down and the market in real estate falls 25%, right? Like that can happen. That's almost happening now. We probably will see that from the start of this year to if you just bought right at the frothy top to like say the fall of this year when the rates really get in as we continue to crank. We're almost there now, but it may get a little bit worse. Who knows? We could also pop from here. I don't know. But let's just say 25% pullback, right? Your house that was worth $1 million is now worth $750. You put $200,000 down. You've lost over 100%. You've lost more than you had. If you put that 200,000 in Bitcoin, you'd still have 100,000 of Bitcoin left. You'd be better off putting it in Bitcoin than putting it in real estate because leverage worked against you. You put 20% down plus fees and everything else. You could potentially have lost all your money and still owe the bank, if you had to close the property today after closing costs, owe the bank another 100,000 on top of that. So if you bought a house at the peak in Ontario and Toronto, you actually have lost your shirt. You're gone. All your money's gone. You're like Chapter 11 bankruptcy. Now imagine if you did that 5 times. You got 5 properties with all your money in real estate. If you put all your money in real estate at the top, you're fucked right now. That's a fact. There's a lot of flippers right now and a lot of real estate guys who went balls deep, high interest on flips with low margin, and they're suffering right now. And it's going to be a lot of pain in the fall. And I hate to say it, but I'm here to pick up the pieces. If people want to sell properties to me, by the way, if you're watching this, I'm sorry if you're in this position. If you bought a bunch of properties at the top of the market, I haven't bought anything. In the early part of the year, everything was overvalued, so I bought nothing. In the fall and the start of the year, there was just nothing attractive to me. It was just getting insanely overvalued. I just started selling because I just thought it was insanely overvalued. And I can't predict the market, but unfortunately, it's one of those things where someone's got to pick up the pieces. So hit me up if you want to make a deal on any of your properties. I probably have an investor that would take a look. It's a lot of the private debt stuff. So the stuff that you don't get tracked with. The banks, their chance of being defaulting is low, right? Because you had to pass stress testing at 6%, right? It was the people that were borrowing at 13, 15% doing flips in Toronto. They were buying off MLS deals. And now they're like, oh shit, the property is supposed to be worth 1.2 and now it's worth 850. The appraisal didn't come in. It's not a burr at all. And I can't refinance the money out. I'm trapped. And my equity is being dissolved right now as the market continues to shift down. And if they bought in an area like Toronto, they probably have no cash flow either. They're probably cash flow negative. So they're losing money every month, even if it's fully rented and finished. If it's not finished and they run out of money midway through renovations, it's even more brutal because they have no money coming in and they're burning high interest and they go try to refinance and rates are all 6 or 7% now and they ran their numbers at 3 or 4. And it's like, oh shit, I didn't run my numbers at a higher enough rate. And so those investors will end up dropping their properties onto the market. If not now it's happening, but soon into the fall, we will see more of that. So there will be more opportunities up and coming. I'm continuing to wade in and continue to buy deals that make long-term sense for me. Yeah, so that's kind of where we're at right now. It's going to get worse. State of the market is real estate will get slightly worse, but 5 years from now, you'd be glad that you bought right now. So there's nothing wrong with buying a house right now. If it is cash flow positive, buy. If your long-term strategy is to sell in 10 years, you don't care what happens the next year or two because you weren't going to sell either way, right? It's like my Bitcoin. Like if I buy Bitcoin at $40,000 Canadian or 40,000 US, say a token or whatever, just pick a number, and it drops to $10,000 a token. That's shitty. You look at it, you're like, oh, it sucks. Like I had $1 million, now it's like 400,000 in market value. But you weren't going to sell that Bitcoin until it reached $100,000 a token, let's say. And you set that rule, that parameter for yourself, and you're a long-term investor. You're like, I'm bullish on it. I like the tech. Eventually, the market cap will be there as people adopt the tech and it becomes more mainstream and large funds can buy in. That's one of the biggest things is like as soon as it's regulated enough that large institutional funds can put 1% of their fund into, say, crypto technology or into probably Bitcoin, because they won't be allowed probably to buy the altcoins, but they'll be able to buy Bitcoin, let's say. When that happens, the market cap of Bitcoin will explode, right? And so if you believe in that in the next 10 years, look, I wholeheartedly believe Bitcoin will be $100,000 a token in the next 10 years. Guaranteed, at a certain point in time, the next 10 years, we will see, probably in the next halving or the halving after that, we will see Bitcoin at over $100,000 a token. So that means that if I believe that, I'm going to hold my tokens. And I don't care. I mean, obviously, it would have been better to buy more tokens at the bottom. But again, who knows where the bottom is? Is it here? Are we going to half of where we are now? No one has a crystal ball. And anyone says that they do, they would have been obviously billionaires by now because they would be shorting. And they would have been able to perfectly time everything all the way down, all the way up. And they'd have even more Bitcoin, right? But none of us can predict the future, especially not the experts in the industry. Now, however, you can make large macro decisions over the long term that let you, beat the market over a long period of time if you made the right macro decisions. But in the micro, trying to trade, no, there's almost no investors that beat the market. Even Warren Buffett hasn't beat the S&P in the last few years. So over a long horizon of time, the only way to outperform is to be really focused on the macro. The reason I like real estate is because over the long term, it tends to be a hedge against inflation. And we know they're devaluing the currency. So over time, you win as they devalue the currencies. They continue to print money and they target an inflation rate of, say, 2.5%, 3%. It is way more aggressive right now, but that's the target. That's their goal, is to deflate their money in half every 50, 60 years, right? That's the goal for the US dollar, the Canadian dollar. So you want to have hard assets that will outpace inflation. And we know the macro trends on demographics, right? Like Canada is immigrating over 1 million people a year, and we're building 150,000 available units. So there's a shortage there. Even if, let's say, they relaxed building codes and zoning applications, which they haven't because of COVID, we're so far behind. It takes years to even put a duplex suite in. You're like a year fighting with engineers in the city and all the inspections just to put an extra unit in a basement. Let's not talk about building whole buildings. It takes years and years and years. So we're years away in available units. We're not building enough. There's a shortage of materials. Inflation's out of control. We can't build enough. So that's one thing to think about, is that, it's out of control, the supply-demand equilibrium. So I still think that 5 years, 10 years from now, if and when rates come back down, because again, no one can service the debts at 7-8%. If you run the numbers long-term at that, we're fucked. So rates won't stay that high. They will get that high, but they won't stay that high. They'll come back down as we go into a recession. They'll have to lower rates again. And when they do, valuations get really fucking sexy in a recession when things have been hit 20, 30, 40%, and all of a sudden now rates are coming down. It's like, oh, now valuations are attractive again because we were running our numbers at 8% and now everything's 3%. So like, kumbaya, 100% growth for everyone. That will happen again because, again, there are a lot of good headwinds around immigration and around population growth, that there aren't enough houses in these places people want to live. And people don't want to live in like South America or Africa, even China for that matter. People are fleeing a lot of these countries, India, etc., and they're coming to Canada and the United States for a better life. And so I think so long as that trend continues, which I think it will, I think Canada will probably grow to 100 million people, then it'll become more and more desirable to have these properties for the long term. So I'm still bullish on real estate long term in great key locations. If I can buy that real estate at a better discount so that cash flows better, hell yeah, I'm all about that. Yeah. Next question. Okay, I lost my spot. I'm trying to find it here. a lot of questions. So ZR Wooten says, I've always been more entrepreneurial at heart, so I'm not really upset that I don't have that job anymore. I just don't know what to do in the meantime. What are you passionate about? If you're an entrepreneur, what can you apply your skills towards to make money? If you love guitar, could you teach guitar on the side right now and side hustle and make 50 bucks an hour teaching people how to play guitar? You know, you had 10 clients a week at 2 hours each. There's over $1,000 a week. You know, that's part-time. You're making 50 grand a year right there, part-time on the side. Lots of things you could do as a side hustle. So many things you could do. So yeah, opportunity. Your time is now freed up, and think about what you could do with that time now and probably make more money with your time. Or just find another job you're more passionate about and keep going. The goal is, so Omega says, the goal is to really have at least 6 to 8 positions. You don't sit at losses greater than -8%. Yeah, I mean, the goal is to have a whole bunch of diversity in all of the buckets that you invest in. So I don't think you should have all of your net worth in real estate. I don't think you should have all your net worth in your business. Even if your business is producing cash over cash, maybe the majority of your wealth you're still putting in your business because it could be a cash machine where you're like, I know entrepreneurs that are friends of mine that can take their capital and 10x it invested in their business. Okay, like I could understand the argument for the majority of your wealth going there. But what if that sector changes? What if a new rule comes in and that business is dead? You need to have different legs to stand on so you can pivot and recover. So it's important, I think, to remember that, you know, there's lots of buckets to invest into. And I think that real estate is one bucket. The stock market is one bucket. Within the stock market, by the way, there are thousands of positions you can expose yourself to have a diverse holding. If you have a stock portfolio with like 30 stocks in it, that's pretty fucked. It's pretty scary. Like, I'd rather see you have indexes like the S&P 500, you know, Russia, India, China, have exposure to different commodities, and as well as tech, as well as, you know, a little bit of real estate as well. If you don't have enough real estate holdings, then you should expose yourself through the stock market to real estate. So I want to see you invested in all the sectors. That way you're safest, right? If oil spikes 50%, say 10% of your portfolio was exposed to oil, that part of your portfolio rips up. If tech and crypto drops, it's okay, because that was maybe only 10% of your portfolio. Like, I think crypto, I went too heavy into crypto. Admittedly, I'm too bullish on crypto. I probably had almost 20% of my net worth exposed. No, not that much. 15% of my net worth was 10 to 15% of my net worth was exposed to crypto. And that was painful because I lost 50% of it temporarily. Long term, it's going to come back. It's going to be a big bucket, I think, longer term. But yeah, I'm slowly dollar cost averaging in even now. I continue to put, you know, if I do a flip deal, I make 50 grand, I'll take 20% of that, take 10 grand, I'll throw it into crypto. And, you know, I continue to dollar cost average, and mining is another way you can dollar cost average in. Every day you're constantly buying a little bit. Make sure you don't sell that stuff now. Make sure you hold on to those tokens in a bear market and unload them in a bull market. So hopefully you can carry the hydro and the costs through this rough time, and then cash out when it's more favorable to do so. Okay, let's just rip through some of these Q&A. I had to catch up here. Do you hold any XRP? No, I don't hold any XRP. It's just not what I have in my portfolio. Oh my God, the only problem, not in London, is scalability. Mike Roser is a growth beast. Come on, just a little southwest. People know that I have been known to go a little crazy. If the right market conditions align, I'm watching and I'm waiting. And when the time comes, I might make an ask of you guys. I might say, hey, I need to raise $10 million right now to buy a whole whack load of deals when market conditions are right. And it'll be when the pain is the most. It'll be when all the media is like, real estate's dead. You know, the world's coming to an end. That's when I'm going to buy the hardest, right? When everyone's the most fearful. So the fear index is pretty high right now. I can negotiate some dirty deals. Like I'm now buying properties. I'm negotiating on some properties right now at 2020 pricing. I've wiped out 2 years. And by the way, we had an amazing 2 years here in London. So it's starting to make sense again. Rents have gone up quite a bit since 2020. So buying properties at 2020 valuations is starting to make more sense, especially when in the next few years rates come back down again. There'll be really, really attractive cash flow to refinance these properties at. But I may make an ask where I need to raise capital from you guys. And it might be just like, hey, who wants to do some mortgage lending? It might be, hey, who wants to partner up on these properties? If you're interested in that, shoot me an email at rosehartcapital@gmail.com, or follow me on Instagram. That's where you'll see me post when I have deals that I need funded. Just follow me on Instagram. It's a good spot. But I think email is good too if you don't have Instagram. Okay, well, I said I have access to 2 lines of credits, one with 128,000 connected to a rental property. The other is attached to my primary residence that increases with each mortgage payment. What do you do to build wealth? Well, the secret to building wealth is to spend a lot less than you earn and then take that difference and invest it in smart places. And another way to juice up returns is to take the capital that you have and apply a little bit of leverage to it and invest it safely. So as an example, with the equity you have in your property, it's probably doing not much for you because it's trapped in that property. Your property produces the same amount of rent, whether you own it in cash or whether you have a mortgage on it. And the mortgage rates typically are a lot less than the return yield on the property. So that difference is where you make a profit. If you can pull that capital out at say 5% interest and invest it, I right now have a property that I would throw a first mortgage on. If anyone's interested in lending, if you have money you want to lend at 10% right now, I will secure it on a property and I will take that capital and I will buy the dip. And I'll buy other properties. So I have $6 I talk about that I'm this close to selling several times now. I could put a mortgage on for $1 million right now. I have another property that's like 800,000 I own, again, in cash. Like I have no mortgage on it right now. And so if I need access to short-term capital, I would just borrow. And for you who have access, you have capital that you want to deploy, it's like, hey, if you can go borrow 5% from the bank and you can go put it out at 10, you can make basically double what you're paying in interest to the bank. That's a great investment. Now, that's even better than investing your own money because you're investing other people's money using leverage. So leverage is a great tool so long as you're careful with what you do with that money that you borrowed. If you borrow money and go buy crypto, no, don't do that. It's too volatile. You could lose your shirt. You borrow money and buy tech stocks, too risky. You borrow that money and you lend unsecured to someone. Again, risky. Be careful who you're lending to and secure the property. Make sure you have good loan to value, good protection. You want to find someone who's wealthy you're lending to. The more wealth they have, the better. Make sure that their debt is under control. They don't have too much debt. That's how people get sunk. So just careful what you do with that capital. I like lending as an example because it's the same asset class. You're borrowing at 5%. It costs you interest every month. You got to make a payment. If you could lend it out and get interest every month, then it covers its debt service for you. Also, you borrow that money, you buy real estate, more property. That's a great place to put the money to because it's relatively safe. You can get cash flow every month. And as long as it's cash flow positive, if we go into a recession where prices fall, you don't care. Go back to that example earlier in the stream. Say you're underwater on a house you bought at the top of the market. You don't care because in 5 years, you'll be way above, you'll have made money. And as long as you can hold through that time and make cash flow, you're good. Where it's a problem is people buying properties that don't cash flow. They're not running their numbers properly. They're not putting in a good maintenance budget. They're not putting in a good CapEx budget. Your furnace is depreciating. Your walls are depreciating. Your roof, your windows, all of it depreciating all the time. You have to allocate for that, right? And people don't do that. I see a lot of guru and guys posting deals, and I see their cash flow numbers. They don't have any maintenance. They don't have any CapEx in there. Like, what the hell? Like, even if your house is brand new build, everything's brand new, which most of the time it isn't. But even if it is all that stuff, a tenant can still trash a unit. Then you got to paint again. You repair the floors, this and that. Things degrade, and you need to have a maintenance budget. It's important. That means that, by definition, almost every deal in Kitchener-Waterloo, Toronto, Vancouver, New York, even some pockets, like any city with more than 500,000 people, it's getting dicey. You gotta make sure you run your numbers carefully, because pretty much anywhere in all of North America. But all the way around me, I'm looking at Ontario, I'm thinking about all these markets, and it's like all around Toronto, everywhere from Hamilton to, Brampton to Oshawa. You got to run your numbers carefully, and people aren't running their numbers carefully, so just be careful. Even in London, there are pockets of London that don't make any sense. So just be careful, run your numbers. Especially if it's in a bad area too. Even more important to run higher vacancy and other issues. I already started looking into markets. I love buying this time. Yeah, I mean, it's a good time to start dollar cost averaging in. Mark, thank you. Love you, man. You're awesome. That's a nice comment. Appreciate that. Hey, Mike, do you do any private lending? I do. I currently have a first mortgage out on a property here in London. I have another bunch of mortgages out. I have a second mortgage, two second mortgages. Yeah, I have a bunch of stuff out right now, and it's yielding fairly well for me. I'm excited to get that capital back. Um, I try to match lending with lending. So like against my HELOC, typically I use the HELOC to go and lend because then I can deduct all that interest on that line against my income I'm earning over here. So from a tax perspective, it's a great way to kind of structure your stuff. I'm more of an active lender in the sense that like I do add-on services too. So I do lender fees, I do deal review, I do my own appraisals, all of that. So it's actually an active business for me as opposed to it being passive. I'm doing it as an active business. I spend a good portion of my time reviewing deals. That's the business that I'm in. So when the CRA asks, "Hey, are you just lending passively?" No, I'm actively reviewing deals every day. People coming to me every day asking me to fund their flips, either as an equity holder or a debt holder. They're asking me to work with them or give them tips or run their numbers. All of that is part of the deal sphere. And so the nice thing about that is that when I lend, it's active business income. I have, employee costs, et cetera, so forth. I'm not just an individual who just one mortgage. I'm doing lots of it. And so because it's a business, I'm able to get the tax rates of around 14% active on the first 500,000. After that, it's like 26%, I think, interest on the next after 500,000. So that's nice to have that tax advantage as opposed to 55% tax in your personal name. Well, it depends on what your tax bracket is. If you're like making 40 grand a year, then your tax bracket would be low. You'd be like very low amount of taxes. So it really depends on what tax bracket you're in, I suppose, as well. For the average person, lending's not so bad. So yeah, if you have any opportunities that you want me to fund, hit me up. And if it's in the London area, I'm happy to look at it to do maybe a first or second mortgage. I'm very conservative in my numbers, so I'm very careful about who I lend to and their background, and the deal itself is very, very important because it's the thing that I have to take if you don't pay. I have to take the deal and take it over. So it has to be good margin there. But yeah, and then if you ever want to lend to me, the business of real estate is literally making a spread on money. So if I can borrow, because I'm Mike Rosehart, and again, I'm very, very low risk, if I can go borrow from someone at say 8%, and I can go find another deal at say 15%, I make a 7% spread. And then if I go to the bank, same thing. They say, "Hey, Mike, you've got 8-figure net worth. We'll lend you." I have a $3.5 million line of credit as an example with Scotiabank, and or had, I guess it's not, it fluctuates. But say $3.5 million line of credit, it's like I could take that and they'll lend me at like say 4% right now. I don't know what the hell prime's at, around 4% probably. And then I could lend that at say 12%. Then I make a huge spread on the bank's money. That is the business that I'm in. That's what I do. In real estate, that's what you do. You borrow from the bank at say 4%, and the cap rate or the return on asset is 8%. Then every dollar you borrow, you make 100% return on that, as opposed to the cost of that debt, right? That's how you make money in real estate. Where it gets scary, guys, is where the cap rates have gotten down to like on some properties have gotten in like Toronto, the larger, hotter markets have gotten like Waterloo and Toronto and Vancouver and New York and Miami and all these cities, California, LA, where the cap rates have gotten down to like 5 or 6, and now borrowing costs are at 6. And so every dollar you borrow, you lose money. For the first time in a long time, you're losing money. The last time interest rates were 6%, cap rates were 10 or 12. Yeah, remember, cap rates have come way down on properties. Income to price, right? That's what a cap rate is. So they're now bringing income to these properties relative to the price because the prices have gotten crazy high. It's crazy to get to the point where, we're actually in the opposite, where there's an imbalance. And the only way this solves is either rates come back down, which they will eventually. They will tighten until they get inflation under control to a point, or until they break the economy, or both. And then rates will come back down. They can't service all the debt. Even the government can't service its own debt without printing, which creates inflation. Anyway, number of reasons why rates will come down. They cannot stay high for long. But right now, that balance is getting to the point where you got to find really good discounted deals so you can get that nice high cap rate. So when you borrow, you can still have a spread there. That's the important piece. That's how you make money in these times. So yeah. Speaking facts. Thank you for that comment. I appreciate that. I do believe to be speaking whatever's on my mind, and it's not always fact. It's mostly opinion. When do you think it's a good time to jump back into real estate? We're getting there now. We're not there all the way yet, but we're getting there. Do you remember the last time this happened in 2020? I do. It was a great time. Bought a lot of properties. And in 2021, I made a lot of money on it. Universal basic income will come into effect once this recession is acknowledged. Maybe. With inflation out of control, though, like even a universal basic income doesn't help a whole ton. Like when we get to a point where it's $100 to put gas in your truck, or 200 bucks to put gas in your truck for 2 weeks, and your universal basic income's like $1,000, like it doesn't do anything. It barely even puts a dent in things as rents are out of control. You know, they definitely want to usher in this new era, and I don't know. With AI, we could have the majority of society do nothing, and it continue to function as tech continues to improve. Right? Please be finance minister of Canada. No, thank you. I do not want to be accountable to all of Canada. That would be a horrible. Being in the public in general, like being a politician, you're just the nature of how the system is designed. You basically become corrupt or you don't win. It's no interest in that at all. Like I wouldn't even want to be prime minister or president. No, thank you. Hey, I appreciate that comment, by the way. 22 thumbs up. We've had lots of people jump in and out of the stream. If you're going to jump off the stream, just click the thumbs up button for me. That'd be sweet. Thank you. This is pretty much my story. Quite possible. Trust no one. Follow and support the current narrative or thing. It's not safe, please. But you will learn from it. Okay. Rosehartarianism. Thank you for that comment as well. Thank you for that comment. If you're to list a house for sale, how long is too long to have it on the market? In the old market, in the early spring, I would say if you've been on the market for 2 weeks, it was too long. You're priced wrong. You should have sold already. But in this market, it might take 30 to 60 days to sell your property. Doesn't necessarily even mean you're priced wrong. It's just that it takes longer to find the right buyer now. People aren't going nuts over your property, so buyers can take their time and find the right property for them. So, yeah. Nathan says, don't worry, still busy working away. Hey, right on. Thanks, Nathan. Appreciate you. Thoughts on Starlink and its effect on rural markets such as Dorchester and Belmont when you suspect these areas will have top-notch internet, good enough to live stream without any lag. Dorchester is interesting. I used to have a cousin that lived in Dorchester. Starlink will definitely help the rural areas with the work from home crowd. I could see rural areas doing better long term. I've been bullish on land for a while now. I see the major metropolitans spreading out. So if you're within a close drive to any major metropolitan city that has more than, say, 400,000 people, close to let's say 500,000 people or more, then there's some bullish sentiment there. Not even just, I think internet is a big piece for sure. Having quality internet, Starlink will fix that. Just in general, having land as things develop over the next 30, 40, 50 years, I'm bullish on land plays. We have a deal that we're working towards closing in August here. It's 15 minutes drive from downtown Kingston, and it's over 50 acres. There's a house built in 2011, nice big barn on it, a guest house. Picked it up for like, I don't even know, 560,000 or something. But like to have that close to Kingston, Ottawa area, I think long term that's a great play. I feel good about owning 50 acres of land with a nice house that can Airbnb and cash flow. Those types of plays I'm very confident in. So even my own house here where I live, I have over an acre. There's lots of development opportunity. As the city grows around me, I think I will do very, very well. Kelly says, which waterfront properties are you looking for? So I'm big into waterfront properties in the Sarnia to Bayfield area. So like Grand Bend, Port Franks. Actually, my favorite area is Kamalaki. It's where I grew up I lived there for almost 10 years of my life. So I'm really fond of that beach section there. It's some of the most beautiful beach and water. It's very nice powdery sand, beautiful blue waters. It's where I will like to spend my summers for the rest of my life. Even if I'm not a resident of Canada anymore, I will still come and visit in the summers to check out some of the most beautiful beaches. And in the winter, you got to get out of Canada. It's nasty. Canada sucks in the winter. So you get out of Canada in the winter when it's cold, and you go to the Bahamas, you go to Costa Rica, you go to Florida. For me, I think the trio is going to be Bahamas, Florida, Canada is like, the travel route. The challenge is I have 3 kids. So figuring out a system that works with that probably involves having a teacher that we hire full time, that is like a nanny of sorts, but also a teacher, and then having lots of group activities so our kids can be exposed to the social aspect at the same time. So lots of sports and group meetings and stuff like that. So we can, have our summers in Canada and have our winters in, say, Florida or the Bahamas. And so it's being able to develop a life that works with that. And I think that a nice thing is through this pandemic, I realized how shitty the school systems are and how indoctrinated and left leaning they are. That, I think I can do a better job. I think we could develop our own curriculum that would advance our kids further. And I honestly didn't have any passion. I hated school. I hated it. I excelled because I knew that I had to. It was my only way out, I thought. But now with the way that the world is today, with the internet and anything you need at the tip of your fingers, a couple clicks away, you can learn anything you need to learn. That there's no need to be studying physics if you have no interest in physics. Like I did physics and calculus and vectors and all these shitty classes that I learned nothing from, where you're just doing memorizing stuff that doesn't even matter, that you never use again in your life. Why? If you have no interest in that field, why? You shouldn't have to take all those courses. Even in university, I had to take like a sociology essay course, where I had to write essays on like the study of people and like how it was the stupidest stuff that I've never used ever and never will use. And it sucks to have to study stuff that you're never going to have to use because they say it's part of the program, right? Like, what? How is this applicable in any way to a business degree? Anyway. Circles get smaller. That's why those who share knowledge will follow you and help each other out. It says your for sale sign. No, I just had my sign back there. I haven't used any of these signs for a long time, and I figured, why not just stick it right here? Covered up my cell phone because I don't want you to call me. But yeah, I mean, like, hey, look, that was I paid to have those made, so might as well get some utility value from it. And now I can say that I'm, marketing myself as a real estate agent, because I am a real estate agent technically. If you wanted to buy an investment property, technically I could take care of you. I have probably refer you to a partner to work with me. They would do all the heavy lifting. They would go show you the properties. I would look at them with you before we present the offer, and then they would write the offer up. And I get to make a commission because I'm sharing that work with that agent gets that lead, right? And they're working, I'm working. It's a win-win, right? It's delegating. But that's part of building a business, right? And getting the Rosehart stamp on the deal that you're doing. So yeah, I mean, there's like 2% buyer's commission, right? So there are a lot of agents who'd be happy to work with one of my clients for 1%. And so I make 1% for just literally getting a couple phone calls. That's $1,000 an hour, $1,500 an hour. And for the client, like, all the other agents out there are shit. Almost all the agents out there are shit. They're baking cookies at open houses, and people just don't know how to close, don't know how to negotiate. In general, most of the agents don't have an analysis type background. So the top 10% or 20% of agents do all the business. And a lot of agents are shifty and just out for their own commission. So they get you into bad properties, they get you into the wrong stuff, they don't run the numbers properly with you, or they just haven't done 20 flips. They haven't owned dozens of properties. They don't know what they don't know, right? They're coming at it from a sales angle, right? And so that investor angle has served me well, and I've helped a dozen or so investors that weren't ever partnered with me. They came to me and said, hey, Mike, would you help me find a property as the realtor? So I do that too. Most people don't even know I'm a realtor, actually. A lot of people reach out and they're like, wait, you're a realtor? I'm like, yeah, I'm a realtor. Of course, I'm in the business. I'm not looking to show you houses, but once in a while, I'll come out to a showing just to keep myself fresh. I enjoy it. But yeah, if you're looking to buy a property in the London area, hit me up because our team will take care of you. Yeah, another reason why I put the sign up there is like a lot of people on Instagram are messaging me, and I'm like, they're like, oh, but you probably don't have comps, do you? And I'm like, yeah, I'm a realtor. How do I not have comps? Or they're like, hey, Mike, we're gonna save you commission on this deal. And it's like, it doesn't cost me anything to list. $0 to list. Anyway. Do you need a license to offer private lending services? So you have to be very, very careful. If you're lending your own money out, you don't need a license. You could actively lend your money out to whoever you want. Even for borrowing, if you're just looking to get some mortgages on your properties, nothing wrong with that. Where you get into trouble is where you're offering equity, where you're borrowing, raising capital for equity. You need to have a memorandum, you need to be registered with securities. A lot of investors, most investors aren't registered. So you just got to be careful about how you position yourself when you're looking to raise capital. If you were taking other people's money and lending that out and making a fee on the lending out of that, like making a basically an introductory fee or a broker fee or taking some of the lender fee, that requires a mortgage license. So yeah, you need a mortgage license to be a mortgage broker. It's not hard to get a mortgage broker's license. You could do that. I thought about getting one too, just so I could do that as well. Like people call me looking for money and I can't lend to them. Then I could imagine I could just say, hey, actually I have this borrow this lender here that I can lend to this borrower, and boom, I can't fund the deal, but these guys can. It's not my money, and I can make a fee, 1 or 2% fee on the deal. It's an active job for me. I'm not looking to build even if I made it passive by hiring people to do a lot of the work, it'd still be a business that would take my mind space away from what I'm already good at. And I got to stay focused on making 7 figures a year at what I'm good at. And so I try not to deviate into too many businesses. Try to stay with my core values. What do you think about investing in Alberta, Edmonton, or Calgary real estate markets? David says. Alberta's booming right now. Calgary's booming. Edmonton's doing fairly well. I like Calgary more than I like Edmonton, but Edmonton's cool too. It has the proximity wise, I like Edmonton quite a lot. It is tied heavily to commodity prices and oil prices, which are at all-time highs. So I would think that prices might be a little higher than when oil falls, which oil will eventually fall again. Seasonally speaking, from a commodity cycle, business cycle perspective, it's not the best time, but yeah. Is it a good time to borrow from interactive brokers to buy shares? A little bit of margin is good. A little bit. Not to the point where, like, if do a stress test, and if the market falls another, like, look at your portfolio, and if your portfolio if you map out how it could handle another 20% drop or something, then that would be something you could look at. Do you think the Muskokas are overvalued? Do you expect valuations to come down? It depends. Smaller lakes are pretty beat up in the Muskokas right now. You see some great deals pop up. It depends is the answer. Could it fall? Yes, it could. For sure it could. I could see it. At the same time, like, I could see it falling, but only to a certain point. Like, Canadians really like cottage country. They really like having that place to get away. And with the recession looming, people might not travel as far. They may decide just to get a cottage and stay local, right? I think it depends. I could see it getting hurt too. Yeah, for sure. It's a luxury item. Luxuries get cut in recessions. So, yep. Bow, 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 bow. Do you sell out of the money covered calls in your dividend portfolio? Yes, I do. Leo says, do you think it's a good time to go into the stock market? It hasn't bottomed out yet, but I would start dollar cost averaging in. We will reach a bottom in the next probably 6 to 9 months, would be my guess. I don't know. I think that we could see another 20% fall from here. I think it's likely. That said, we could also have a bit of a rip from here, 10% up and then 20% down. So you could get in now, make a little profit. I think if you're focused on the long term, if your goal is like what your wealth is going to be 5 years from now, buying in now, you'll make money for sure. Whereas buying in January, I didn't feel the same way. I didn't feel great about buying the market in January. However, even buying the market in January, 10 years from now, you're up. So you can't really lose if you're diversified and you own a little piece of the entire market. So I'm talking S&P 500, I'm talking a little piece of the NASDAQ, I'm talking a piece of the emerging markets ETFs, I'm talking commodities, I'm talking being exposed to all of the sectors, a little bit of everything, you'll be perfectly fine. As long as you rebalance and rotate the portfolio a little bit. If certain sectors blow up, you got to rebalance, obviously, to keep to your asset allocations that you preset in your investor profile statement at the beginning of your investing journey. That's one of the most important things, is developing an IPS. And then staying to that is even harder. I know all too well. I was like, oh, no more than 10% of my net worth in crypto exposure. And then here I am, like more than 10%, 15% exposure. It's 50% more exposure than I should have had. And in markets bear markets like this, it's more acutely painful. It's fine long term. That bucket will adjust. Actually, with the fall in crypto, I'm now under my 10% of my net worth is in crypto for sure. So I'm good. It reallocated for me. There you go, guys. Sometimes the market will reallocate for you. Is it a good time to borrow from interactive brokers? I answered that question. I mean, not too much leverage right now. I'd be careful. It's a lot better now to have leverage than it was in January. It would have been a lot worse to be fully levered in January. Trust me. On the other side of that, though, I had a ton of leverage in January. I was on margin quite a bit, and I got liquidated. And I'm hella glad that I was using my margin. Like a counter thought to that is like having a lot of margin, though, in a recession, it force liquidates you. So you actually end up not losing all that much money because you're fully margined out. And the nice thing is they margin call you real quick. So it forces you to rebalance and get out, before getting pummeled. But of course, you got to get in there and obviously sell a lot to avoid margin calls. And so it can be a good thing. It'll force you to rebalance. I've been outperforming the NASDAQ this month, actually. So my benchmark is the NASDAQ because my portfolio is a lot of tech and crypto, et cetera, so forth. And I think the NASDAQ's down 7% on the month approximately. And I'm up like 7%. So I'm 14% outperforming the NASDAQ right now. And again, most of that is because I'm hedging and shorting, protecting all of my positions. I continue to hold, but I use margin to short. So that might sound crazy, right? Like I'm using margin right now, but I'm using margin to protect against downside. So if the market rips down, oh, my phone's like dying. If the market rips down, I don't get margin called, I make money. And I use that to buy more of the positions that I already have or to fortify the positions that I have. Yeah, I mean, a small percentage, I think, in crypto is a good idea. I like crypto as an asset class, just like I like real estate as an asset class. I like real estate as an asset class more because I can develop an edge. In crypto, there are no edges. The only way to make more money than someone else is to be the greater or the lesser fool, the greater fool strategy, right? So you want to be the lesser fool and sell your stuff to someone else for more money. That's it. That's how you win in crypto. Whereas in real estate, you can use that asset to produce cash flow and over the long term, get all your money back through utilizing that asset. Renting it to people, providing space, it has utility value. If I borrow from the business to pay off a mortgage, is 1% interest legal or reasonable? I don't know. Talk to your accountant about that one. There are certain minimum rules, but if you've already let money into your corp, you can probably take it out for free. So it just depends if you've lent more into your corp than you've taken out, in which case you could probably take money back out to repay yourself. I don't know the rules. I think there are strict rules on repaying that capital too. So check the rules online. They change all the time, but an accountant will know best. I did sell the milk company, but I still have some investment with them. Eric says, my brother has 300,000 to his name. He loves working on real estate. What would you tell him to get to 1 million in 5 years? Well, take the $300,000 as we come into the bottom here in real estate and lever that capital up. $300,000 will buy you $1.5 million in real estate, and then work on that real estate, improve its value. Hopefully he bought smart, so that $1.5 million from real estate immediately is worth 2, and then he adds value to it, so it becomes worth 2.5, and then refinance that new created $1 million in equity and buy, $5 million in real estate. Do it again. Either sell it and then you have money and grow it, and that's the best way to do it, is to buy undervalued real estate, turn it around. Ideally, the bigger the deal, the better, but make sure your numbers work. That's the most important thing. Would it be worth it to become a real estate identify? I don't think becoming a realtor is worth it. For most people, you've got to be doing a lot of deals for it to be worth it. Mark says, I followed the FIRE movement, did well with real estate, ended up in the ER, started enjoying my life, got to go back to FIRE. I over-enjoyed myself. That's good. Glad to hear that you're doing well now and that real estate was part of that journey. That's cool. Kamiyaki, didn't catch that name. Oh, Kamlaki. There's lots of areas that I like. Like, it's a very small place. I wouldn't necessarily recommend investing in those areas. I just happen to have the emotional reasons why I like that area. The beach is just beautiful there. There are almost no properties for sale there. So they're very hard to find when they do pop up. And just for me, I know the area like the back of my hand. And so there's some strategic advantages that I have having grown up there. There's some emotional stuff to it as well. But yeah. Just my son just said to me he loved physics. There you go. So if you love physics, do that. Cool. You know, like study what you're passionate about. If it's physics, you do that. If it's English and Shakespearean poetry, awesome. Do that, right? Like whatever you're passionate about. But you should be able to pick up, I don't know, call it a stream of learning or an academic stream of learning where it's tailored to what your interest is. Juan Rosarnia here. Thanks for always coming back on Wednesdays. Hey, no problem. Been what, 3, 4, 5 years now I've been doing this? I don't even know. 2018 maybe? Over 4 or 5 years of consistent every single week. There are thousands of hours of me going off and just sharing my thoughts. The nice thing about that is we can go back and we can look at it. Not that anyone ever does, but it's cool to see my mindset change over time. We pay $120 a week to fill our van. Ooh, ouch. I think I got through all these questions now. Okay, I gotta go. Is there money being made in Shakespeare? Maybe, if you're like a really good playwright or somehow could go viral doing. No, the arts tend to not make a whole lot of money unless you're like people making NFTs. I don't know. It tends to not be as valued. There are certain professions that just don't pay that well, but if you love what you do, then you don't work a day in your life and you don't need to have a lot, right? The whole point of the FIRE movement is like, you can live on like 30 grand a year and have a good life if you don't value materialistic crap, which most people don't really value anyway. Even if they say that they value it, they don't really value it. Anyway, it won't make you happy. The secret to unlocking wealth for you guys is 3 levers in your control of your financial future. Spend less, earn more, and maximize returns on the difference. All right, everyone, we'll see you next week. It's been a slice. I've been enjoying this last hour and 7 minutes with you guys. We'll see you next week. You guys know where to find me on Facebook. Look for the little blue check mark beside my name. If you want to follow me on there, you can follow me on there. That's the place where you'll never find me, trying to, find any fake profiles, trying to get you to buy Forex or whatever. I have nothing to, no, I don't sell any of that shit. No. If you see those fake profiles, no. Instagram at Mike Rosehart. Look for the one that's at Mike Rosehart. There are a couple out there that are fake, that copy all my pictures, that have like at Mike Rose Hottie and like weird at symbols that they say they're my name, but eventually get taken down, I'm sure. There's lots of those for every one of the influencers out there right now on Instagram, so be careful of those. Anyway, thank you everyone so much for following tonight and for every single week that you tune in. If you're watching the playback, give me a like, jump in the comments, and hit me up on Instagram or Facebook. See you guys.